Don't look now. These dollar store stocks, this is Dollar General, absolutely crushing it. Number 2 gainer in the entire S&P for the past month. But my next guest says this is actually a red flag. I want to bring in now Jim Paulsen. And Jim, you know, talking about the economy, Atlanta Fed says we are absolutely crushing it. You're not so sure. So what do you think they're missing?
Well, I think that, you know, we've had a void in the data here, Charles. You know, since the government shutdown, a lot of data we're really, it's always out of date, but it's really out of date than what we're getting. So I've kind of gone to some equity metrics, which is daily priced, and a lot of those are giving me some warning signs. And one of them, to your point, is I'm watching Walmart just significantly outperform luxury retailers, and that has been a good inverse relationship with real GDP growth, and it's pointing straight south right now. If I look at Bloomberg U.S. inflation-sensitive equities relative total return index, that's been collapsing here in the second half of this year. That has a really close relationship with commodity prices, and it's suggesting downward pressure. If I look at the relative performance of the cyclical sectors of the S&P 500, they've come down a lot here, really since the government shutdown.
Right.
And that has a close relationship with industrial production. And then finally, the relative performance of employment services stocks have really gone south, and that has a close relationship with the job market. So I don't know. I think the economy's pretty punk, you know, almost at unacceptable levels. You know, real GDP growth is stuck around 2%, I think. And most importantly, you know, the unemployment rate has risen a full percentage point in absolute historical unique fashion in this recovery to 4.4%. And job creation year to date is growing about 0.5%. And the ADP numbers of late are suggesting it's going to get worse.
Yeah.
So I think we're weaker, and we're going to get more policy support as a result.
Yeah, and to that point, inflation expectations now, they're starting to come down. We saw it on Friday with the Michigan sentiment number. Today, we got a little bit of the same thing with the New York Fed. How much room does this give the Fed to be more accommodative as we go into next year?
I think it's already been helping and will continue to. You know, I'd also mentioned the break-even rates in the bond market, like the one-year break-even rate has been flat around 2.6% now for the last couple of years, and that's kind of the embedded inflation expectation of the bond market. And then you mentioned Main Street expectations are pretty punk. I think it gives them a lot of room. You know, if you're going to say, do we have runaway inflation right now, or do we have a really weak jobs market? And which one of those two should take precedence? I think it's the job market that wins.
Yeah, I agree with you 1,000%. So let's then talk about opportunity, because in your note you talked about the new era segments, you know, stalling a little bit. We just had Jack saying the same thing, Jack Manley, not crashing, right? It's not the dot-com bubble time, right. But you know, but maybe this is now when people start to look for opportunities. Where do you see that leadership coming from?
Well, I think that the tech and new era stocks are kind of become invariant to normal cyclical forces and economic policies. You know, they've been so big, they grow on their own innovative cycles. But the rest of the economy, the old era parts, they very much need policy support. And I argue that this has been the least policy supported bull market we've ever had, and that's why it's been so narrow. If we do get more support, better, more aggressive, accommodative economic policies, then I think the broader areas are going to start beating the new era sector. Stuff like the small caps, for example, or the equal weighted S&P, or value stocks, or the deep cyclical sectors, or what's already happening, the international stocks. You know, if we drop the dollar, look at what happens with international stocks this year. Well, if you improve the money supply and steepen the yield curve, you'll notice what cyclical stocks and value stocks can do. I think one of the reasons tech stocks have been so popular, Charles, is not just their own fundamental performances, which have been fantastic,
right.
But they've done that when everything else has been horrific. Yeah. And if the rest just starts doing better, I think that'll detract some of their popularity.
Yeah, and in the process, they actually also became, ironically, the de facto safe haven. So when you wanted to ride the waves, you bought them, and then when you wanted a safe haven, then Foxhole, you bought them. We know at some point that changes, and maybe this year coming up will be it. Jim, always appreciate your wisdom. Thank you so much.
Thanks, Charles. Happy holidays.